is that not a sexy pair of pants? And if you're interested in some amazing cargo pants for the outdoors, for any activity, go to sprytack.com, get yourself a pair. Yeah! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake bubblehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And we got to talk about Uber, bro. Why? Because it went up. So I have not looked at these earnings, but I did a brief skim, okay? I'm not going to lie. And there's a lot of gobbledygook. But when it comes to looking at a stock, from an accounting perspective, it's really simple, okay? All you have to do is look at a couple margins to really see what's going on with this company. But a lot of people on YouTube are concerned with revenue. Now, I've covered Uber multiple times, and there's a lot of risks associated with it. And the biggest one, I think, is government regulation. Because right now, there's all these cab drivers, and they're mad because they have to get these licenses and permits, and it costs a lot of money, especially in big cities that are like communistic and stuff. And they have to compete with these Uber guys, these clowns that just have an Uber, and they don't have to get these licenses, and it's not fair. So that's the biggest risk to Uber, in my humble opinion. But there's also another thing I don't like about Uber. Let's go check it out, bro. So why is Uber such a hot topic? Well, they just came out with earnings, and in the past 3 months, the stock is up, 37.95%. Bye. That's right, ladies and gentlemen. Uber is just amazing, bro. You think VT got up that much? I wish. It's up like 2%. And if VT goes up 2%, that's a good day. Let me make sure I'm sharing my screen. So here's Uber's earnings, okay? Let's look at the financial highlights. Gross bookings grew 33% year over year, or 36% on a constant currency basis, with mobility gross bookings of $13.4 billion and delivery gross bookings of $13.9 billion. Trips during the quarter grew 24% year over year, or approximately 21 trips per day on average. Now, I think I read this somewhere. Don't take me at face value. But apparently because of inflation, a lot of people are like, well, everything's more expensive. I need a side job and, maybe I'll do Uber. I don't know why you would do that with gas prices high, but apparently that's the thing. Now, I wonder what's going to happen when inflation goes down, because we just had the recent CPI report. And I think it was flat month over month, whatever. So let's keep reading. Net loss attributable to Uber Technologies, I don't like that, was $2.6 billion, which includes a $1.7 billion net headwind related to Uber's equity investments, primarily due to aggregated unrealized losses related to the reevaluation. Additionally, net loss included $470 million of stock-based compensation. So basically how it works is, depending on how much you control of a business determines, let's say Uber bought some other companies, which it looks like they did. Aurora, Grab, and Zomato. They buy other companies. And based on the earnings of those underlying companies, you may have to do some accounting adjustments. You may have to write down some of those investments because you own part of the company and you own part of the earnings. And if the company's losing money or it turns out not to be as valuable as you thought it was, you have to do some kind of charge that hits your income statement and helps you. Well, it doesn't help you. It gives you a loss. So apparently, Aurora, Grab, and Zomato, either they were massively unprofitable, depending on what type of accounting they were doing, or there was some kind of impairment, okay? So they had a net loss of $2.6 billion, but if you take out the impairment or the write-down of these businesses, Aurora, Grab, and Zomato my tomato, the loss was $900 million. So they only lost $900 million, okay? Adjusted EBITDA, what does that mean? Well, we're Uber and we don't make any money. I don't think we ever have. So what we're going to do is we're going to use this non-GAAP metric called adjusted EBITDA, earnings before interest, taxes, depreciation, and amortization, to make ourselves look profitable, bro. I mean, capital expenditures don't matter. Amortization, interest, taxes, who cares? It doesn't matter. Adjusted EBITDA margin was a percentage of gross bookings was 1.3%. Net cash provided by operating activities was $439 million. Okay. let's go back and where do they say the stock compensation expense? So basically, it looks like a big reason they have positive operating activities is they're paying their employees with stock options. And the way it works, and like I said, I need to dust off my accounting textbook. But basically, when a company awards a stock option, they have a certain vesting period where you earn the stock option. So let's say in 4 years, you're granted a stock option, and in 4 years, you've earned it. Well, the way it works in accounting is they take this, I think it's like the Black-Scholes model, and they value the option. And then you have to expense that option. The company has to expense that option over the vesting period. And that's where you get this stock-based compensation expense. I might actually do a video where I dive into that because it's been a while since I did stock-based compensation. But basically, that's kind of how it works. So it's a non-cash expense. And then when the employees exercise their stock options, the company gets a little bit of cash because the employees have the right but not the obligation to buy shares of the company. They give the company Uber cash, and the employees get stock. And that leads to dilution. So it looks like a big part of their operating cash flow was an add back for stock-based compensation expense. That's not good, okay? So there's a bunch of mumbo jumbo in here, okay? Let's look at this. So this is apparently a big deal. So year-over-year changes in mobility, delivery, and freight. Mobility's up 55%, delivery's up 7%, and they have some currency accounting here. And then total is up 33%. Now, what do I make of this data? Well, baby Uber had a lot of issues in 2021 because of the pandemic and lockdowns. That could potentially be a reason why they had such a massive increase. Remember, we had a bunch of lockdowns, and that probably affected Uber. I remember riding in an Uber and I had to wear a mask. I had to wear a mask, and it was freaking annoying, okay? So here they are, more revenue, my avenue, more revenue. I mean, there's just a lot of junk in here. Like, who reads this crap, okay? Now, the beauty of accounting is you can actually look at the big picture and see right off the bat whether this is a wonderful thing. Let's look at the balance sheet real quick, okay? So here we see two balance sheets. There's actually two balance sheets here. On the left, we have their balance sheet, their assets, liabilities, and equity as of December 31st, 2021. And then the balance sheet as of June 30th, 2022. So we look at cash. Cash didn't really change. Restricted cash went down. Receivables didn't really change. Prepaid expenses didn't really change. I always try to see if there's like a big difference, okay? Let's see. Restricted cash. Investments went down. You see this? Do you see this? Their investments went down. Either they disposed of some investments or they had to write them down because they had massive losses. That's a big one. That hits your income statement, okay? And you can also see it on the statement of cash flows. Equity method investments. Okay, they separately break out equity method investments. So we have to go see what this actually was. These could be like short-term investments too. The equity method is where if you invest a certain amount, like you own between 20 and 50% of a company, that's when you have to account for, the company's earnings and dividends that they pay to you, and that affects your investment balance. PP&E didn't really change. Operating lease is the same. Intangible assets. Goodwill went down a little bit. I guess they had like a tiny little impairment. Nothing really crazy. Let's see. Liabilities. It seems like there really hasn't been any crazy changes except for these investments here, right here. That's the big one, okay? Let's see. Additional paid in capital. Looks like they issued some stock. Accumulated deficit. An accumulated deficit means that is your total losses all added up since the beginning of your company. So total, Uber My Boober has lost on an accrual basis of accounting $32 billion. And you can see Uber's total equity has declined, okay? That is basically the shareholders, claim to the assets of the company. Because a company, there's two components. A company can either use equity investors' money to buy assets, they can use debt to buy assets, or they can use their retained earnings to buy assets. So you can see their equity the shareholders' ownership of the company has decreased by 50%. So that tells me there was a huge freaking loss. Okay. Now let's look at the revenue for the 6 months ended June 30th, 2022. Okay. Massive increase in revenue, massive increase in cost of revenue. Let's see. So cost of revenue is basically everything that goes into your top line. I've explained it in multiple videos. Like if you're a company that buys and sells shoes, buying the shoes from the wholesaler and you're the retailer, that goes to your inventory. And then when you sell it, it becomes cost of goods sold. Okay, so let's see what their gross margin was. Of course, exclusive of depreciation and amortization. So they didn't even freaking show it properly. Let's see what it was exclusive of. Okay, so they have a decent gross margin. Oops, I screwed that up pretty badly. 14,927 minus 9,179 divided by 14,927. Okay, so their gross margin exclusive of depreciation and amortization, which is a non-cash expense, but it is an expense, is 38%. And we compare that to the year prior. Oh, God. Do I actually use calculators? I don't know. 6832. Okay, so their gross margin, excluding depreciation and amortization, has actually dropped pretty significantly. It's gone from 44% down to 38% or whatever. Let's see their loss from operations. 1198, probably about 1492. So they had an 8% loss from operations. We compare that to the prior year. I like to do comparisons. Okay, so they at least improved their loss over the preceding 6 months. So let's see. Net income. Let's see. Net income attributable to Uber share. So their bottom line profit, let's see. I know you guys are getting bored. Woo! 57% loss. Ouch. That's pretty painful. So we can see that Uber is still unprofitable, okay? You know, yes, there's some impacts from equity method investments, but that's something that they bought. Okay, they invested in a company and that company lost money. It should matter. It should impact your earnings. GAAP says so. Let's look at cash flows from operations. So basically how the statement of cash flows works is you start with your net income and then you add back non-cash expenses and you subtract, non-cash gains, revenues, and then you adjust for working capital. That's how you changes in working capital. That's how you get your cash flows from operations. Remember, the income statement is all about the accrual basis of accounting. Revenue is recognized when it's earned, not when the cash received. Expenses are accrued when they are incurred, not when the cash is paid. This right here, this income statement does not necessarily mean cash. This may not mean cash revenues. If you perform a service, you've earned revenue. When you go to the statement of cash flows, that's where you're actually finding the cash. You're basically saying, how did the cash change? The cash was this at the beginning of the period, and now it's this. What caused that? So we can see some add backs here, okay? They add back depreciation and amortization. They add back bad debt expense, and they add back stock-based compensation. So what is their stock-based compensation as a percentage of revenues? Let's see. I always like to check this metric to see like how badly they like to dilute. So it's roughly 5.5%. That seems kind of steep. Deferred income taxes, unrealized gain or loss on debt and equity. Yeah, so this huge loss right here, they're adding it back because a loss, a write-down, affects the income statement, but it doesn't necessarily mean that you lost any cash. So it's added back. So we go down, blah, 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 blah. Oh, it actually goes down. And we can see that where's their operating activities? They actually had some positive cash flow from operations. And it looks like they might actually have some free cash flow too, just a little teeny bit. That's adorable. All right, net change in investing activities. They bought some PP&E. They bought some non-marketable equity securities. They did a tiny acquisition, it looks like, in the last 6 months. and finance activities. They made some principal payments on finance leases, proceeds from the issuance of common stock under the employee stock purchase plan. When you see a positive number, that means that cash is coming into the company. So some employees exercise their stock options, which means they dilute it a little bit. Okay. So looking at all this, I mean, I like this summary better. It's just so much easier. We can go to stockanalysis.com. They got the income statement already here, and we can look at some shares outstanding. So we can see shares going up, diluting. Net income, negative. Whoa, they actually had some positive quarters. Good for them. But you can see they're generally still losing money. Negative earnings per share mostly. Free cash flow per share, negative. Gross margin has decreased. Interesting. Operating margin has gotten worse from the last quarter, but it's getting better. Profit margin, pretty bad because of the write-down with the investments. And we can go look at the ratios. Let's see. Price to sales, 2.5. Price to loss ratios, that's what it should mean. Price to books, dang. Debt to equity, 1.68. Current ratio. I don't know. Like, this isn't my type of business, man. Like, Uber just loses money. I mean, look at this. Negative. Oh, one positive, probably a non-cash thing. Negative. Let's see. Free cash flow. Negative. Like, no. I don't care if the stock went up. I don't care. I mean, you go look at this company. They made some terrible investments. They had to write down a massive amount of their investments. They have pretty high stock-based compensation. It's roughly 5% of their revenues. And they barely have positive operating cash flow. Well, so what are my thoughts on Uber? I'm not buying this trash. I know who you are, but it's okay. I won't say anything. Thank you. Thank you very much, Christoph Liftoff. These titles are hilarious. Yeah, Uber's a 10x stock, bro. Lafufu used to pump Uber 2 years ago. Of course he did. Oh, it's losing money and it's diluting shareholders. Oh, yeah, it's a buy, bro. I used to do Uber for a living on the Las Vegas Strip. Did you ever pick up Jeremy? Now my car's broken out. I live in my car. Uber's killing it, bro. Uber's legit, but Jeremy was pump and dumping Uber. I mean, Uber is I've used Uber all the time. I actually use Lyft more because it's cheaper. I don't have any loyalties to Uber, okay? I like more money in my pocket. Oh, man, Strongman, you're so finished. Looks like Risk On is back and bigger than ever. Jeremy will get his own wiki page. Uber up more in a month than VT in 5 years. Let's go look at the history of Uber stock, guys. Let's go see. Boy! Well, it's not down too savagely. Let's see. Okay, over 5 years, Uber has returned negative 21%. What does VT return in 5 years? I would hazard a guess. Positive returns, right? Let's see. But it went up. Remember, VT doesn't factor in dividends. Oh! I'm sure I'm sharing my screen. You see this, buddy? VT's up 35%, not even including dividends. Oh, and Uber. Oh, I'm finished, bro. Nice try there, bucko. Nice try. Comment retract. That's right, boy. 13 years in business and they can still barely have ever make profits. This is so hard, guys. Like, does it make money? I don't know why. Why are you buying this? I'm a little biased, so thank you. Who reminds me calling Uber a good buy a couple months ago? Did Lafufu call it? I mean, he's up 35% if that's what he did. He knew this was going to happen, guy. He knew it. How do you feel about Uber's profit model with all the benefits they give out? Well, I mean, it seems like they have a lot of stock-based compensation. I don't like that. It's called dilution. Now, when it comes to the rest of their profits, I mean, I didn't do that much of a deep dive into Uber. I'm not buying it. I'm up 21%. Good job, bro. What you drinking, homie? Vienna Lager. I actually don't really like this beer that much, but it's all I have. So, my brother does Uber Eats job on a Tesla. Interesting. You think he'd be a Richie Rich with a Tesla as a side hustle? All right, guys. Well, that's it. Don't forget to check out sprytack.com. Get yourself a nice pair of pants. And I may do a Roblox reaction. Let me guess. Unprofitable. Cheers!